What's up guys, welcome back to my channel. Welcome back. This is Kingsfx trader right here. If you are new to my channel, please consider subscribing to this channel. Don't forget to turn on the notification bell to get notified each time I release a new video, okay, like this one. Okay, so today I'm going to be sharing with you the proper way to use Fibonacci retracement. Okay, now this is a request from my comment section. One of my subscribers asked me to create a video on Fibonacci, okay, because I take your comment very serious. All right, then you can go down to that comment section right now and drop the next video you want me to create. Okay, drop any topic you want me to cover when it comes to forex trading. Okay, so now the first thing we're going to be looking at is why we use Fibonacci tool. Okay, we're going to see why we use this Fibonacci tool. We are going to also be looking at the levels to pay attention to. Okay, the Fibonacci level we have to pay attention. Then we are going to see how to set this Fibonacci retracement in order not to get confused with those lines. All right, then we are going to see which kind of market structure, the type of market structure the Fibonacci retracement is suit, like best suit on. Okay, we're also going to see how to actually draw this Fibonacci retracement. Then I'm going to be sharing with you some common mistakes traders do when it comes to trading with Fibonacci. And finally, I'm going to share with you the right and the perfect way to apply and trade Fibonacci retracement. Alright, so this is what we are going to be covering in this video. Alright, if this is what you want, please start liking this video. I'm going to share this secret with you guys. Alright, so we dive into the first thing, which is why we use Fibonacci retracement. Okay, so Fibonacci retracement provide us with entry opportunities. Okay, so they give us a perfect place to enter our trade. Alright, so we should also know that Fibonacci retracement serves as support and resistance. Okay, and you know our support and resistance are places or level where price reacts or respects or reverse from. When the price hits a support level, it's likely that the price is going to react to the level or reverses to the opposite direction. The same thing as when the price hits the resistance level, the price is likely going to reverse or react to that level. Okay, so now we have seen this. Then what level are we going to be looking at? Okay, which level of this Fibonacci are we going to be focusing on? So basically we are going to be focusing on the 50% Fibonacci level. Okay, which you can actually set it up to 50%, or you set it at 0.5 percent or 0.5 level. Okay, then the next level we are going to be looking at is the 61.8. okay, we are going to be looking at the 61.8 level, or 0.618, right? So basically these are the two levels we are going to be paying attention to. So the next thing we are going to be covering is how to set up our Fibonacci retracement. Now I'm going to pick my Fibonacci retracement. If you're on MetaTrader, if you're on MetaTrader 4 or 5, okay, you will just see it right here up here. So you just pick your Fibonacci retracement, then you place it on the chart. So let me just place it here on this chart and drag it down, or you drag it to the upside. Okay, so you can see how my own look like. I've already set up my own. Okay, so when you place your own, you might not be seeing the same thing. You might have a lot of lines here, which is confusing, and that's why I said you need to learn how to set it up. So as I've dropped my own, so what I need to do is to right click on it, and I will go to properties. Okay, I will go to properties, and here in properties I have the common, the levels, the parameter, visualization. Okay, so common is basically the color of the trend line. Okay, this line here. Okay, you can just set up the trend line. This is just the name, so we are not doing anything here. We are leaving it as it is. Okay, unless you want to change the color, you can change. So the levels are where we'll be paying attention. Okay, so if you look at here, I just have like about 4 levels here, which is 0, the 50, 61 and 100. Now if you open your own, you are going to be having a lot of, maybe you are going to see 26, I think 26, 32 or so and all that here. So all you need to do is to click on it. Okay, if I want to delete this, I'll just click on it and delete. Okay, I'll click on delete. Okay, so look at those levels apart from this one and delete them. Click them and delete, click them and delete. So only you need to just have the 1, 0.68, 618, 0.5 and 0. That's all you need. Okay, that's all you need if you are going to be following my own strategy. All right, so you don't need all those other ones apart from this. Okay, so that you just focus on this level, which is level 61.8 and level 50. All right, so now you see how I set up my own. This is how my own look like. Then you can, this parameter, you don't have to do anything here. Visualization, this is where you set the time frames you want it to show. So you have to select all time frame, because we need our Fibonacci to show in all time frame anytime we put it in. Okay, so this is how to set up your own Fibonacci. So remember, in levels, that's where we are paying attention to. You have a lot of levels here. Delete all of them, click on them, and then tap on delete to remove them. Okay, only the levels you are expected to leave is just the 0, the 50, the 61.8 and 100. All right, so this is how to set up your own Fibonacci retracement. So this is my own right here. Okay, this is my own Fibonacci retracement, and you can see I have my 0 level up, I have my 50, I have my 61.8, and I have my 100. Okay, so the next thing we are going to be covering is which market structure are we using this Fibonacci for. Okay, so basically Fibonacci best suits a trending market. Okay, you are looking for a trending market, so if you are using Fibonacci, you should be a trend trader. Okay, you should be a trend trader, not a trader who trade ranging market. Okay, so the next thing we are going to be covering is how to draw our Fibonacci. Okay, how to draw this Fib retracement. Let me just delete this. Okay, and go back to pick it up again. So I will just pick it up. If you see here, you can see that this price is currently going to the upside. Okay, you can see the price from here start making the higher high, higher low, then another higher high, higher low, or swing high, swing low. Okay, so now you can see that this price have made a new swing low and is about to make another impulsive move to the upside. Okay, so this is the pullback, and that's the pullback we want to know. Okay, the level. Okay, the level of the pullback, or the how deep the pullback will be. Okay, for us to know when to enter. You know, when you are trading a trending market, if it's an uptrend, you are looking for swing lows for entry. Okay, you want to enter your trade on a swing low. Okay, if you are trading a downtrend, you are looking for entry at the swing highs. Okay, so if you have been trading, you should know that you don't jump into a moving train. You have to wait for the price to come to you before you jump into the trade. So some of us lose money because we just jump into a moving train. Okay, a kind of impulsive move. The price already completing the impulsive move when you are jumping in. Okay, and once you jump in, there will be a pullback, and the pullback is going to trigger your stop loss. So how do we draw this Fibonacci? I will just pick my Fibonacci level. Okay, for an uptrend like this, I have to look for the previous swing low. So assuming the price is just here, okay, the price is retracing back, okay, because we want to see a retracement. We want to know the how much this retracement will go. Okay, now if this retracement is here and I want to draw my Fibonacci, I just have to look for the previous swing low, which is here. Okay, this is the previous swing low here. Okay, look at the current swing high. This is the pullback. So we are looking at this pullback. We want to know how far this pullback will go. We just place our Fibonacci level here, okay, at the swing low, and drag it to the top. Okay, and drag it to the top this way. So you can see this is my swing low. Okay, this is my swing low, and this is my swing high. So I place it here and drag it to the top. All right, so this is 0, this is 100, and I have my 61, I have my 50 right here. Okay, so if you look at this point, you can see that this price pulled back to 60, okay, 61.8 before making another impulsive move. Okay, the pullback ended at 61.8, which is what we are looking for. Okay, so basically we are paying attention to the 50 level and 61.8. okay, so now this pullback happens to stop at 61.8, which is a good a perfect entry or entry opportunity for us to go long on this trade. All right, so you can see how we draw our Fibonacci retracement. Okay, this is how we draw our Fibonacci retracement for an uptrend. So this is an uptrend example of how to draw. Remember, for an uptrend, you go to the previous swing low, okay, and place it. Okay, let me just do that again quickly. Let me do away with this one right here. So I'll just pick my tool. Look at the previous swing low here. I'll just drop it here. Okay, if I drop it, I will drag to the upside. Okay, I'll drag to the upside the swing high. You can see this current swing high right here. Okay, so I'll drag it to that place. Okay, and extend it, and you can see the level where my 60 and 50 is. Okay, so this is the level, right? So this is what you need to do for an uptrend. Okay, as simple as that. So we are going to be looking at a downtrend example of this, of how to draw this Fibonacci retracement, guys. Okay guys, so we look for a downtrend example. Okay, right here we have a downtrend. Okay, let's see if we can draw. Let's say that this price has been going down. You can see that this price has been making a impulsive move, pullback, impulsive move, pullback, another impulsive move. Okay, so let's say that we see this impulsive move. We see the price here. Okay, let's say the price is currently here. Okay, and we want to draw our Fibonacci. Okay, the price currently here. I want to know how far this pullback will be. Okay, how long it will, or the level where it will stop. We will have another swing high for before another impulsive move to the downside. So how do we now know the level where we'll be targeting, or where we'll be looking at opportunity to make entry? So I just pick my tool again. Okay, for you to draw in a downtrend, okay, you are going to be placing it on the current swing high. Okay, look at the swing high here. You can see that pin back candlestick right there. That's the current swing high. I'm going to place it there, okay, and drag it down to the current swing low, which is this point. Okay, you can see this point. That's where I'm going to drag it to. You can see I have my Fibonacci in place. Alright, so you can see I have the pullback to this point. So the pullback happened between the level 50 and 61. Okay, very close to 61. After that, the price pushed down, make another impulsive move to the downside. You can see a breakout from that 50 level, okay, and a retest before the massive movement or massive drop to the downside. Okay, so you can see how we apply it in a downtrend. So let me still do it again for clarity purposes. So I have to do away with this one. Okay, now I have to go and pick up this. Look at my swing high. Okay, I'll just place it for a downtrend. You go first from swing high and drag it to the swing low. Okay, after that you will now see our price pull back to level between level 50 and 61.8. Then we start looking for entry. Okay, we start looking for entry. So this is how to draw your Fibonacci retracement both in a downtrend and uptrend. Okay, so the next thing we are going to be looking at is the common mistake traders do. Okay, why people don't make money using this Fibonacci. So it's not enough you learning how to draw the Fibonacci, how to set them up and all that. Okay, you needed to know how to make use of this Fibonacci retracement level. Okay, so you don't just jump into the trade because the price have retraced back to level 50 or 61. Okay, there are things you need to consider before you jump into a trade like this. Okay, so I'm going to share with you some common mistake people do or traders do while using Fibonacci retracement. Okay, so let me just start from the first Fibonacci I put in. Okay, I think this is the first one right there. So now we have this level right here. So you can see that the price pulled back to level 61. Okay, a lot of traders are going to jump into a buy right now. Okay, once the price is there, they jump into buy without checking something. Okay, without cross-checking something, whether this is a good time to buy or not. So for the fact that Fibonacci retracement, okay, for the fact that Fibonacci retracement is on the 61.8 level or 50 level, is not a guarantee that you should go and buy. Okay, now that's first mistake traders do. So they just jump into the trade because they see the price at 61.8 level or 50 level. So that's not how to trade or treat Fibonacci retracement. Okay, then the second mistake people do is that they take Fibonacci retracement level as a line. Okay, as a line. You can see this line, they just take it as a line. People take it as a line, but let me tell you that Fibonacci retracement is not just a line. It's not just a line, it's just is an area. So some people will just be waiting for the price to touch this line. If the price did not touch this line, no, it is not, it have not gotten to the level. Or if the price push down below this level 61, maybe the price is here, is still not Fibonacci because they have crossed. They just believe that this is the line, this is the line. But you have to see Fibonacci level as area. So anywhere around this place is still the level. Okay, anywhere around the 61.8 or around 50 level is still Fibonacci level. So it must not, the price must not just come to 50 and start reversing to the upward, or come to 61 and start reversing to the upward. Sometimes the price can come in between them and start reacting or showing you some sign or signal for a massive push to the upside for an uptrend. Okay, so you take a Fibonacci level as area, not just a line. That's the mistake, another mistake some traders do. Okay, so the last mistake most traders do is that they fail to understand how to draw this Fibonacci retracement. Okay, they draw the Fibonacci retracement the wrong way. Okay, some people, I can't even explain, but I know if you are doing that, you have taken correction and you know how to draw it now. So you need to understand how to draw this Fibonacci retracement so that you will not get a false signal. Okay, if you draw it the wrong way, you are going to be getting a false signal and you are going to be losing money. So you need to know how to draw it the right way, how to apply it, and how to take those lines. You must take the lines as an area, not just a line. Okay, and you must know how to draw it, and you must not just take a trade because the price is at Fibonacci retracement level. You don't just jump into a trade. Okay, you need more confirm. You need to confirm if that level is going to hold the price from pushing to the downside or to the upside, depending on the trend. Alright guys, so we now know how to draw our Fibonacci. Okay, so the next thing is, how do we leverage on this? How do we make money with this Fibonacci retracement? Okay, so I said that most traders, okay, lose out on using this Fibonacci because they treat this Fibonacci as a line instead of an area. Okay, so all these places is part of level 50 and 61. So some people, if the price is here, okay, and you are seeing some good candlestick formation right there, they will not trade because they believe that, or they are waiting for the price to come to level 61.8. So you must not wait for the price to come to level 61.8. Sometimes the level will stop between this level 50 and 61. Okay, the price might come sometimes close to level 50 but not touching level 50 before reversing, and sometimes the price will break level 61.8 and come down a bit before reversing to the upside. So what we are looking at is not just level 50, okay, but we are looking at it as an area. Okay, all these places is part of level 50, all these places is also part of level 61. Okay, so what you need to do now is, when you see this thing, when you see the level, okay, when you were able to put in your Fibonacci retracement, okay, and you see the level 50 and 61, the next thing you have to do, okay, to take advantage of this is that you want to check if this is if this area or this level is an area of value. What do I mean? Do we have a resistance there? Do we have a support level there? Do we have maybe a trend line at that zone? Okay, you need to consider all these things to take a quality trade, guys. So if I looking at this chart, I think we have a support right here, and I believe it's fell between this level. Okay, so let's see if I put in my support line here. Okay, you can see I have my support line at that zone. Okay, you can see I have my support line between level 61.8 and level 50. So it's still a good factor to consider. Okay, so now we are not just trading Fibonacci in isolation. Okay, we are trading it, relating it also to support traders. Okay, those who trade support and resistance, they are also here waiting for the price to bounce back or to retest their support level for them to go long. Okay, so we are not trading just Fibonacci retracement. We're also going to be considering if the Fibonacci retracement, if the level 50 and 61.8 is within a support level or resistance level. For an uptrend like this, we are looking at it at we want to see 50 or 61 at support level, and as you can see, they align at our support level, okay, which is this level right here. If you check, this line is serving as support right here. Okay, let's see. Good, it serves as resistance here, serves as support here, support here, support here. So this is a strong line. You can see the price keep respecting that line or retesting that line. So this is another point or factor we need to consider. Okay, do you have your Fibonacci level? Okay, do you have the 50 and 61 level at an area of value? Okay, if you see it on a support level or a stand level, good. All right, then the next thing we are going to be checking is candlestick pattern. Okay, so if you look here, you can see when the price retraces to this level, you can see how massive this bearish candlestick. You can see the momentum is high. The momentum is high. This one is high. The momentum is high. These three candlesticks were heady candlesticks. Okay, you see how heady these candlesticks are, forming to the downside. But when they break, you can see how the momentum of this candle that broke this level, which is 50. So after this candlestick, this one started forming, get to this point, and was rejected. Okay, that's the first signal we got. Okay, this price, this line, this level rejected this price, with our support also rejected this price. Okay, that's the first signal. So you need to consider the candlestick formation on that level. Okay, you can see how the weak rejections we had here. You can see how the price keep respecting this level. That means we are going long. Okay, because candlestick traders, people who trade candlesticks, are also here watching this particular price action, and they can see it's playing well for them, and they are going long with us. So we are not just trading Fibonacci in isolation. We need to combine it with both candlestick, okay, candlestick patterns. We are going to combine it with support levels. Okay, so we are going into this buying. We are going long with Fibonacci retracement traders. We are going long with support traders. We are going long with candlestick traders. Okay, so we need to see confluence like this. Okay, we need to go in with school of traders. We don't just go in alone. Okay, and for you to be profitable, you must follow the crowd. Okay, when it comes to forex trading, you want to see where the population are. When it comes to forex, you need to see where the population are. If they are buying, you buy. If they are selling, you sell. Okay, and that's exactly why we have to picture those support level, resistance level, and even trend line when we are trading. Okay, so we have three schools of traders right here taking this trade, and that is exactly the reason why we are going long, and that's the reason why the price have to push to the upside. Remember, we don't guess. Okay, we don't guess, we don't even predict, but we react. Okay, we react with the price. Whatever the price is doing, we react to it. You can see the price is on our level, okay, which is our support level. Good. Then the price is also at level 61.8, okay, and we still have the candlestick reacting. So once the candlestick start reacting to this level, we also have to react with what the candlestick is doing. Okay, we have to follow the candlestick. We have to follow the price. Wherever the price is going, we follow the price. Okay, you don't go ahead of the price, and you don't jump in front of the price. You wait for the price to come to you, and you react with whatever the price is doing. You react to it. So this is how to trade, and this is how to make money using Fibonacci. All right, so we have to go to the second example. The second example, we have to move to that second example where we draw. Okay, look at the second example right here. So now we have our Fibonacci right here. So if you look here, we have a support line. You can see this line is a support line. So this is a support level, guys. This is a support level. So we had to signal here. We have confirmed this as a level, okay, an area of value where we should be looking at opportunity to make entry. Okay, so we are not just trading because of Fibonacci, okay, or because of the price that our Fibonacci retracement level, which is 61 or 50. Okay, we're also considering the resistance level. So this line right here served as support here, and currently is serving as resistance here. Okay, so that's why we are taking this trade. Okay, so we need to confirm other things. The next thing you are going to be seeing here is what is the candlestick reaction at that zone. You can see the bullish candlestick, momentum candlestick going to the upside, and when this price hits this point, you can see the price start reacting to that zone, guys. Okay, you can see the weak rejection. This one gets to that point and was rejected to the downside at that support level. That's the first signal we got. Okay, we see that the candlestick start reacting to that level. Then we had this candlestick right here, hanging man. Then the next bearish engulfing candlestick formed. Okay, bearish engulfing, which you know is a selling signal, a strong signal right there. So we discover a bearish engulfing candlestick at our support zone between our levels 50 and 61, and we have to go short. We are going short not just because our prices have retraced back to level 61.8 or 50. We are going back because the price at a resistance zone, we also see candlestick reacting to that zone, and our level 50 and 61.8 is also there. So that's why we are entering our sell right there. So we don't just go into any make entry alone. We want to make sure that we consider other traders. So if you are a trader and you are self-centered, okay, you are likely going to be losing a lot of money. So before you enter any trade, consider what other people are doing. What are support traders doing now? What are trend traders doing? What are indicators traders doing? You need to check what all these people are doing before you place a buy or a sell. Okay, if you are just considering yourself, you might be biased and you might be taking the wrong trade, or you might be seeing some fake breakout without confirmation. So you must confirm your trade. So this is a bonus tip for you guys. So for the fact that the price is at our level, is not a guarantee that the price is going to respect it. Okay, sometimes the price will come to that level and break away from it and keep going up, and it might be a change of trend anyways. So you have to see some reaction and you react to the price. Okay, you have to see the price respecting that zone, or you start seeing some weak rejections using the candlestick pattern. You can also see some formation before you jump into that trade, and you must make sure that you see the 50 and 61 at area of value, which might be a support level or resistance level, guys. And this is it in this video. Please smash that like button for me. I want this video to get up to 10,000 likes, guys. Let's do it. Just smash that like button for me, and also don't forget to subscribe if you are new to my channel, or you are a returning subscriber. You are welcome. Then turn on the notification bell to always get notified each time I release a new video like this one. So if you have any other question, any other video you want me to create, drop it in the comment section, guys, and I'm going to be doing that step by step, or one after the other. Okay, so drop the comment in the comment section. I'm going to check it out, and I'm going to create a video and show you how to do those things the right way, like this one, guys. And I'll see you guys in the next one. Bye for now, guys. Remember, I don't do investment program. I have to say this also. I don't do investment program. So if anybody is saying or chatting you up as Kingsfx trader, or created a group with my name or my picture, just know that that person is a scammer. All right. Then secondary, I don't leave my number in the comment section. So if you see anybody sending you a number, you should chat me up as Kingsfx, okay, or chat me up on WhatsApp and all that. That person is a scammer. I have stopped doing that long ago. Okay, you can only see my number in the description of my video. Okay, nobody have access to edit my description, but they can go to the comment section and reply to your comments as Kingsfx. So don't be scammed. Be aware of this and avoid being scammed. Okay, guys, I'll see you guys in the next one. Bye for now. Enjoy.